referred to a study of 13 countries which have managed 7% plus growth continuously for a period of 25 years. And when you pointed the common characteristics, you said they were marked by high public investment, almost 5 to 7% of the GDP, that they were marked by basic macroeconomic stability, people was an asset, etc. Let me just take high public investment. Did that come largely from the government? I'm asking you because the charge in India is that public investment is not happening, or infrastructure investment is not happening because of the absence of bond markets. Was bond markets so critical to these 13 countries?
No, not really. I mean, the crucial thing is to get the investment done as the support base for the private sector investment and dynamics. There are parts of public sector investment that can be done with private financing. And that's not a bad idea, partly because governments have trouble allocating this portion of their budget to investments. But the government's a very important player and has to do some of it.
Well, you said that India and Vietnam are almost there in those 13 countries that have been able to manage relatively high rates of growth. Yeah. Since you have studied India in a comparative sense, what would be the stumbling block or blocks according to you?
I don't really think there are any. I mean, I think India probably most prominently is about to join this group. It's just that the growth acceleration was somewhat more gradual and started slightly later, so it's just a question of time. But as far as I can tell, the strategies and policies are fundamentally in the right direction, and the structural dynamics in the economy that are the underpinning of sustained high growth are pretty much all there.
Well, let me come to your own country, the United States. How are you looking at the economy at this juncture? Do you think that at least a fear of a double-dip recession is genuinely behind?
Not quite. I mean, I don't think a double-dip recession is the most likely recession is the most likely outcome by any means. I think the more likely outcome, and this is probably the majority view, is a fairly long, difficult recovery, which is sometimes called a long, flat U, or a long, slightly deep U. And the reason for that is that the structural undoing of the imbalances, the deleveraging process, the restoration of household balance sheets, the stabilization of the housing and the commercial real estate markets, all of these things they just take time. You can't do them overnight. And all of that is going to essentially act like a drag on the economy. So I'm expecting, and I think I'm not an outlier in this case, a sort of difficult recovery, and then probably a period of slower growth after that as well.
Some organizations like the IMF have estimated maybe a 2% growth for the developed world in the current year. Would it be even as good as that?
I would be a little more pessimistic than that. On the other hand, the IMF has a lot of data and information. It's hard to know, but I think with the difficulties in Europe on the fiscal side and the both political and economic challenges in the United States, I think a 2% average in the advanced countries would be on the high side and a good outcome, actually.
There are a series of steps that the Obama administration is taking against banks, the Volcker rules as they've become famous. Do you think they will succeed in the first place? Succeed in the sense, will they even be implemented? And are they on the right track now?
Yeah, I think there was a big shock with the senatorial election in Massachusetts. And the Obama administration seems to be in the process of rejiggering the agenda and focusing more on jobs and regulatory reform and restoring growth in general. And I think that's a good thing. Now, the political situation is really quite divided now, with the electorate somewhat angry and disappointed at the progress so far. So I think it's hard to know whether some of these financial market and regulatory reforms are actually going to pass, and in what form. And my personal view is that the Volcker rule isn't a bad starting point, provided it's accompanied by pretty vigorous restrictions, kind of counter-cyclical restrictions on requirements in the area of capital, margin, reserves, and so on for the economy. And that leaves open the question of how to handle the hedge funds and the proprietary trading.
How do you see the world in the next, say, 2 years or even 3 years? Do you see any tectonic shift to emerging markets, to emerging economies? And how will that play out, for instance, in the world of currencies, where perhaps the dependence on the dollar still remains?
Well, I think the high growth area is likely to be the major emerging economies and more broadly Asia, East and South. And that's a big change. I mean, these are high growth areas before, but now the relatively high is much bigger. That's a confidence booster for India and China and the region generally. India and China in particular are special in the sense that they are rapidly in the process of acquiring very significant impact on the global economy. China a bit ahead of India, but not that much measured in years. And that carries with it responsibilities, and they're landing on countries that are still not very rich as measured in per capita income terms, and that's a hard problem. It involves balancing domestic issues versus sort of maintaining the global system issues. And, the honest truth is, when you're in a developing country, you'd prefer to have the domestic agenda be the focus, and you're being forced, in some ways to take a really important and growing role in the G20 and in other places where the global economy is kind of put together and reassembled.
You've studied the Chinese economy in some depth. There have been recent tightening moves. The reserve requirements have been increased, as they have been in India thereafter. How do you see the economy panning? There are lots of fears about huge capacities being created, huge imbalances. It's still opaque for someone who is not so closely associated with that country. Do you think that these imbalances will implode the economic growth in some fashion? Or do you think the Chinese have a fairly decent record in spite of all the skeptics?
Yeah, they've had a very good track record, and a long history in a very rapidly growing country like India now and China. You constantly are hitting bottlenecks and potential imbalances. I sometimes characterize it as sort of the difference between driving a Morris Minor on a city street and a Formula One car at 280 kilometers an hour. Things happen pretty fast. The Chinese have a track record of aggressively and quickly getting on these things. I think they do have a potential inflation and asset bubble problem, and it looks like they're responding quickly to that. They also have very major structural changes, both macro and microeconomic, to shift the economy away from the historically important labor-intensive processing manufacturing industries and to drive the growth from the middle class and domestic consumption more. And these are not easy transitions. I think the Chinese have this pretty well in focus, and now it's a question of getting the job done.